Buy Disney share now. £10,000. Oh, it's going up. What? What do you mean I blew up my account? I can't lost £10,000. Oh, it's okay. I'll put in another £10,000 from my main account and it will go in. And then I'll just buy shares in McDonald's and it will go up. What? I've lost £10,000 again? Are you kidding? Revenge trading. Ah yes, the common mistakes that every trader makes. Getting emotional and trading for revenge's sake. Nearly all of us have been there, and that's something that we always want to avoid doing. Hi guys, and welcome back to my channel. My name is Jason Lloyd, and on my channel we talk a lot about entrepreneurship and investing, how to make you money and learn from my mistakes. So do stick around. In this video today we are going to be talking about mindset. Let's get into it. My name is Jason Lloyd. Welcome back to my channel for those of you that have seen me in my previous videos. If you are new and you do like talking about stocks and ETFs, the stock market and how you can make money online, then you do want to stick around. So make sure that you click that subscribe button below and like this video if you find the content useful. As a trader, we often get very emotional when it comes to dealing with money because of course we don't want to lose money because it's so valuable to us and we've worked really, really hard. And obviously if we're going to invest in something, we want to make sure that we're making the right decisions. Obviously, when you are investing in stocks or you're buying into the Forex market, the commodity markets, and maybe you've got index funds, stocks or bonds, they can often fluctuate up and down, and this is completely normal, so it's something that we don't need to worry about. But because we are human, we worry because we may look at our account, say we've invested £10,000, and we might look and see, oh my gosh, today my account says that it's red and I'm minus £500. Now, this is something that is very, very normal if you are a trader, if you're a day trader, a scalp trader, depending on what trader you are, you're always going to see moves and rises in the market. It's completely normal. So you just have to make sure that you're keeping a positive mindset as a trader and not become emotionally attached to your trades. Because often as well, we'll buy into a trade thinking, oh, this is a company I love, I definitely believe in them, they're going to give me an amazing return, but it may not be the case. You may have actually invested your money into a bad investment and the stock goes down. We could see a crash. There's a potential recession, exactly like COVID-19 is happening right now, and we've seen the stock market crash, some in cases up to 95% on some stocks on the market. We've got Aston Martin, for example, that's dropped down 95%. The S&P 500 dropped down 35% in the case of a few days in March, and it's still recovering since then. It has gone up quite a lot since its lows in March. This is obviously a lot of fear, and again, it's mainly talking about that mindset. It's not to worry about anything short term because things do recover and things will eventually move accordingly to where the markets reposition when investors reinvest their money. After all, Warren Buffett, one of the greatest investors of all time, who is also the company director of Berkshire Hathaway, which does make up a large sum in my portfolio currently, said, "If you aren't willing to own a stock for at least 10 years, do not even consider owning it for 10 minutes. From previous experience, I know firsthand as an investor how important it is to make money on the open markets. And of course, we always want to see a high return straight away. But this is not always the case. It is worth noting that, again, if you are going to become an investor, that you've got to think long term. It's no good thinking about short-term gains. Because if you're someone that thinks about short-term gain, but you've invested in a stock and it's not moving for, say, several weeks, which can happen, and it even goes down, you are going to start to get emotional, which is what this video is about. Actually, I lied. What this whole video about is how much you're not going to smash that like button for me. But because I said that, you're now going to smash the like button for me and prove me wrong. But you have to remember that as a long-term investor, it is about seeing growth long-term. It's not about worrying what is currently going on in the current markets. So as an investor, it's always really crucial to keep a positive mindset, especially when we are seeing times of doubt and fear and people are pulling out the markets because of a potential recession or potentially a stock market crash, just as we are seeing right now in the open markets. But it's no good acting on this fear because of course we're long-term investors, so we've got to be in it for the long term. So if we're holding on to a stock that is down, it's no good worrying about it. Things will eventually recover and things will eventually reopen up because of the current situation. It may look very different, but things are not going to stay like this forever. Eventually something will happen. We have to always remember that no matter what happens, keep a positive mindset because things will move up and down, and this is completely normal. One of the questions that I get quite often from you guys is what is going to be happening with the current market levels? Are we going to see a return or are we going to have another market crash? Well, my honest opinion is no one can predict what the stock market is going to do, because if anyone could predict what the stock market was going to do, then obviously we would all be millionaires and we'd follow that one person and then be making a lot of money. way. But my general advice is we may actually see a second wave of this COVID-19, and in case we do go back into a lockdown, especially globally, if this does continue and we don't find a vaccine, then definitely we could be seeing a lower average on the stock market, and we could see some of these stocks drop down back and test those lows in March that we had. But my honest opinion is right now, the economies are starting to recover. We've got the Fed pumping out trillions of dollars with stimulus bills coming out in the US. We are also seeing here in England, the governments are helping to do whatever they can in order to keep the economy afloat. They are actually granting small bursaries and loans to most small and medium-sized businesses and people that are struggling in order to keep themselves afloat. So I think as an economy, we are going to recover well. And of course, we have seen interest rates potentially going down to negative or in some cases zero in the US. So we can definitely tell that the economies are going to recover because it's going to allow people to re-access that cash easily, not have interest, and they're going to want to pay out because they're not going to be wanting investing with a negative interest rate because they're actually going to end up lose money by investing their money on bonds rather than spending it into the economy. Some advice I once heard is he who has money in a recession is king. Basically meaning that if you have money during a recession, you can invest it because most investments and share prices go down, just like we are seeing now in the open market. The way I like to see it is a lot of these current shares and stocks are currently undervalued by quite a lot. It's almost like a sale. If you imagine, this comes around once a decade. Usually we see a recession or a drop in the stock market this much, usually once every 10 years. So it's really important that you do your research and take advantage of opportunities ahead like this, because you can really gain a lot of capital and you can make some really good investments during this time. So all you've got to do is do your research. Always know that there is a risk when you are trading, but the potential to upscale your business right now could be massive if you are to invest in the right shares. Paying attention what is going on around you in the economy and obviously making those smart investment decisions. But we have to stay positive and we have to keep a clear mindset as a trader. We don't want to get emotionally attached to our trades, and if we are seeing that our account is in the red and it is negative, it's a completely normal process. Just take a step back and just chill out, basically, because I can guarantee you that the next day it's going to have moved again, and it may even be even further down, or it may have gone up and you might be in the plus. So it's nothing to worry about. And as an experienced trader and investor, it is perfectly normal to have bad days and wake up on the wrong side of the bed. It is during these times that you must have the day off. It is no good trying to make irrational decisions trading and investing, because these can lead to bad and irrational decisions, particularly if your mood is off. But this is completely normal if you are a trader. Even experienced traders go through this on a daily, weekly and monthly and even an annually basis. So it's something to be aware of. It's all about keeping a positive mindset. Which brings me to my last tip of the day, which is only risk money that you are willing to lose. This will prevent you from being emotional if you are to lose the money that you're willing to risk, because it will not be a huge asset, versus losing money that you don't have that you are not willing to risk, because that is what is going to cause you upset and make you emotional. And so guys, if you are a new investor, do let me know below in the comments which platform you are currently with, and if you have any questions about the platforms that I'm with, because I would love to help you out. I currently am using the trading app on 212. 212 are a great platform, and they do offer a free stock up to £100 if you are to open a platform with them. So in order to claim that free stock up to £100, you will have to use an affiliate link. So I have kindly left you one of those in the description below, so just go and check that one out. Just deposit £1 and you will get that free stock up to £100. So they are a great platform provider. They have a lot of different options and stocks, and they have a free service commission. So when you are going to buy into those stocks and ETFs, you're not going to be charged, unlike other platform providers out there such as AJ Bell. You've got obviously your main banks that also provide those platform services, and you've got Hargreaves Lansdown, and there's many more. And of course, you want to always add up the fees associated when you are going to learn how to trade and you're going to open up a platform with a certain broker, because you don't want to be charged, because you might end up with less money that you invested because of fees. So always make sure that you do your research so you know what broker you're using to put your money into and which platform provider you're going to choose to make sure you benefit from your investments. And if you would like that free stock up to £100, then do grab it. Check out the link below. I have included that below in the comments for you. And so if you have found the information in this video, then I do ask you please to smash the like button for me, because I do love that, and so does the YouTube algorithm, and it really helps out with the channel, so it will give me a chance to put up more videos in the future to help you guys out. Whatever you do, have a great day, and I'll see you back on my channel soon. Make sure to subscribe if you haven't already, because I would love to have you on this journey with me. See you soon. Remember that the future is coming and everything works out for a reason.